It's time to get more insight behind some of the world's leading banks' currency projections with another Targets in Focus. I'm joined today by Senior Market Strategist at Crédit Agricole CIB, Adam Myers. Thanks very much for talking to Dukascopy TV, Adam. Let's start with the dollar-yen. After last week's intervention, this pair is trading around the 78 level. Do you think the BOJ will be pleased with that? Do you expect that to continue? And where do you see this pair heading in 1, 3 and 12 months?
Well, in terms of the dollar-yen where it is right now, yes, I think the MOF and therefore the BOJ would be happy with where dollar-yen is trading. However, I don't think that level is going to last for very long, and that is because as a safe haven, the yen is one of the few that are not really investors are not overweight at the moment. So over the next couple of months, I would expect dollar yen to continue to track lower, back down towards that 75 low level and perhaps through, because investors really are running out of options in terms of safe haven flows. I think what we're seeing now is the escalation of currency wars against many of the developed countries. Switzerland, of course, has been conspicuous by its intervention and its setting of a level in EURUSD, which it's defending, and other countries, of course, have been pursuing quantitative easing, which is the printing of money and therefore the basing of their currency. I think those moves, combined with the MOF intervention in the yen last week, really signal that ahead of this weekend's G20, there is going to be some serious infighting going on between developed nations as to which country is going to have the weakest currency.
The situation in Greece really seems to be coming to a head this week with yet more volatility. Do you see further volatility and negative possibilities with the impact of a referendum or a Greek government collapse? And where do you see the euro-dollar heading?
The short-term impact of any Greek referendum no vote is clearly negative for the euro. The thing that has bound euro together over the last 12 years has been the fact that its coordinated policy has been respected by all nations, and of course with the Greeks voting no and therefore defaulting on its debt obligations, that would be a significant negative for the core of the European Union and the middle ground in the European Union, of course all those nations which are following a similar path, albeit less extreme than Greece's. So no question that it would be negative initially. Further ahead, however, with a weaker debtor nation like Greece removed from the European Union, there's no question that the group as a whole would be strengthened, and maybe the European Union would be looking for stronger economic partners to join the European Union. Of course, a key candidate for that would be either Poland or the Czech Republic.
On to the pound dollar. Is this pair being driven mainly by events in Europe or fears about the UK economy? And where do you think this pair will head?
There's no question that investors still have fears about the UK economy. But even so, the UK has the advantage of having its own floating exchange rate and, of course, its own independent central bank, which is able to set policy for the UK as a whole. That has really seen investors label the UK as what one would call a semi-safe haven, so perhaps not as directly influenced as the Swiss franc and the Japanese yen in these periods of risk aversion, but still definitely considered more of a safe haven than some of the alternatives at the moment in terms of G10 currencies. So what we should see is that notwithstanding very weak UK growth numbers, the UK economy should muddle through over the next 6 to 12 months, and the pound sterling will remain at these weaker levels versus the dollar, but perhaps strengthen somewhat against the euro given the policy difficulties being experienced in Europe.
Thank you very much for joining me, Adam. There'll be more news and interviews exclusive to Dukascopy TV this week, including another Targets in Focus from Rand Merchant Bank in South Africa. So stay tuned. Goodbye.